All right, traders, we need to have a serious conversation. This is one of the most important topics you will be hearing about Forex. And for those of you who are brand new to this industry, you will need to rewatch this video at some point in the future because you will be experiencing the things that I'm going to be talking about in the next few months, if you even last that long. And for those of you who are already trading and have a little bit of experience, this might be the perfect time that you need to hear this message. Because the reality is, most of us want to be rich, right? Hell, most of us can't even wait. Like, we all wanted to be rich like yesterday. But if you can overcome this psychological barrier, you will be one of the few who do end up beating this game of Forex. So let's talk about that. But first, I need to ask you guys a huge favor. Go ahead and hit the little like button. It takes just a second, and it'll allow this message to spread to traders who need to hear the same exact information. So let's get started. Now, most Forex gurus on YouTube and especially Instagram will not be talking about this topic because it's not in their best interest to give you a reality check because it doesn't help with their little course sales. They're promising if you pay $500 and buy their course, then you're going to be driving a Lamborghini within 90 days like this lady.
Excuse me, love your car. What do you do for a living?
Rich, I'm 93.
And the people who buy those little $500 get-rich-quick courses, they all soon realize that the market does not hesitate to chew them up and spit them out if they don't know what they're doing in this market. I could care less if you join our program. My main goal is to make sure that you guys trade this market the right way so you can eventually take this full time and eventually make a substantial amount of income. So the conversations that we have are not ones where I tell you things that you want to hear, but instead, as a coach, I'm here to tell you things that you need to hear. Warren Buffett, arguably one of the greatest investors of all time, has a famous quote that says, "The market is a device for transferring money from the impatient to the patient." And what does he mean by that? He means the patient people are the winners, and then the impatient traders are the losers. And the reality is, most of us, most of society, we've been conditioned to be impatient. We've been conditioned to seek instant gratification. Just think about it. Think about all the different external factors. Think about all the different technological advancements that have happened in the past few years that cater to our little instant gratification needs. Think about it. What do we have? We have fast food. We all know that fast food is not good for us, yet fast food restaurants are one of the most successful restaurants in the entire world. Why? Because it's quick. It's super quick. What else? We got Amazon same-day delivery. We got high-speed internet. We got ordering food from an app and having it delivered to us. Okay, that one's probably just for laziness. But video games such as Farmville or Fortnite or Clash of Clans, they all have these things called microtransactions, and what those are, they cater to the human psychological need of wanting things now, of the instant gratification. And these video game companies are making billions and billions of dollars taking advantage of our human psychological need of wanting things done now. In fact, back in the 1970s, Stanford did an experiment called the famous Marshmallow Experiment. And what they did was, it was a study on the difference between delayed gratification and instant gratification. And they got children between the age of 3 and 5 years old, and they sat them in separate rooms and said, "Here's a marshmallow. You can eat this marshmallow right now. I'm going to leave the room. But if you hold off on eating that marshmallow, I'll come back in the room after a certain amount of time and I'll give you a second marshmallow." Now, with that experiment, some kids ate the marshmallow because they couldn't wait. They couldn't fight that temptation. And other children did end up waiting. So when the researcher came back, they gave them the second marshmallow, and then the child was able to eat the second marshmallow. And what they did was they followed these kids for the next quite a few years, for 20, 30 years, and they kind of followed up with them and saw where these children were at in terms of their life, in terms of their health, in terms of their SAT scores, in terms of their overall happiness in their life. And what they found was the kids who were patient, Their lives were a lot more successful, a lot more happier, and a lot more fulfilled than the children who didn't have any of that delayed gratification trait. So if we know that the lack of patience is one of the biggest downfalls of traders and most people in life in general, and if I ask you the question, out of which two groups of people, whether it's someone looking for that instant gratification or the patient trader, which one's going to be more successful? Who's going to have the highest chance of success? Which one do you want to be? Of course, everyone watching this video is going to tell me that they want to be that patient trader. They want to be that trader that has that delayed gratification. But you need to do an audit for yourself. You need to really, truly ask yourself, is that truly, genuinely how you're treating the market? Are you treating this market with patience? Are you looking at this in terms of the long game? Or are you seeking that instant gratification? Are you doing things in your trading that reflect that you are looking for that instant gratification? So now that we know what the issue is, we need to break that down, deconstruct it, and start building it up the right way. And most of us probably started trading Forex because we thought it was a quick way to make money. Hell, I did, until the market makes us realize that that's not how it works. The market gives us a reality check, and it comes to a point in a trader's journey where they make that life-altering decision whether to quit and go back to their normal 9 to 5 and just give up on their dreams, or to continue to persist and start doing this the right way with practice, playing the long game, and achieve the life that they would have made had they not quit. Hell, doctors, after graduating high school, go through 10 more years of schooling to make $300,000 to $400,000 a year as a doctor. And traders can't even give themselves 1 year of practicing and building their mental strength and overcoming their weaknesses for 1 year for that success. They want that success within 90 days. They want to retire within 2 months, which is why most traders end up quitting, which is why the fail rate is so high, simply because most traders don't give themselves enough time to achieve that success. I want to show you something. We talked about Warren Buffett earlier, and this is a picture of his net worth based on his age. And I want you to look at this. This is when he was 14 years old. You see what his net worth was and how it was slowly growing and slowly accumulating. And as you can see what happened to his net worth, it dramatically shot up. Dramatically. So the question is, what if Warren Buffett quit right here, where most people end up quitting? What if he quit right here in the very beginning? He would not have been able to accumulate this amass of wealth. And matter of fact, this picture is actually a little bit outdated. You'll see this is when he was 83 years old with $58.5 billion. Just Googling his net worth now, $95 billion at over 90 years old. So tell me, what would this graph look like now if one more bar was created here? This bar would be off my computer screen. The market rewards those who are patient and absolutely slaughters those who cannot wait. There are two battles traders need to fight when it comes to patience. The first battle is the patience of success. That's what we just talked about. The second battle traders need to fight is when it comes to entering trades themselves. And let's just do an example on Euro USD, since this is the currency pair that we talked about in our last video. So let's just go to an area over here, and let's say that a trader saw this trend line here and wanted to enter a trade on a potential break and retest of this trend line, right? So they're just waiting for the market to potentially creep up here, and then they're looking to potentially enter a sell in the down direction for a sell. So what the trader will do, the trader will go into like a smaller time frame or something, and as you notice, as the candles are slowly being painted, the time frame that I'm currently in right now is 15 minutes, meaning just four of these candles is 1 hour. So this would be 2 hours, 3 hours, 4 hours. This would be a long period of time. So in reality, because of their impatient, they're sitting there at the charts waiting to enter a specific trade. So let's just kind of follow this chart and see what happens. They see that the price is almost hitting it. They see that the price is almost hitting the trend line for the retest to go short, but they see that the price hasn't quite hit it, and they see that the price is rejecting off of it. So what they'll do is, because of their impatience, they'll say, you know what, the price might not reach back this trend line, so let me go ahead and enter a trade right now. Let me just go ahead and enter a short. I don't want to be patient. Let me just go ahead and enter right now. So what they'll end up doing, they'll end up entering the trade right here, and they'll put their stop loss above that, and let's say they put their take profit, I guess, like at this low here, right? So as they're entering in the trade, they entered here, and the trade ends up going in profit before spiking back up to the correct entry where they should have entered at the exact break and retest of the trend line. So what ended up happening, because they were impatient, they ended up entering here, whereas they should have entered up here at the top. So if their stop loss was big enough to stay in that trade, let's assume in this case it was, you'll notice in this scenario, the risk to reward is 3, meaning they're risking 1 unit of risk to gain 3 units of risk. What I mean by this is, if in this case they were willing to lose, let's say $1,000 on this trade, because of their entry, because they entered too soon, they're looking to gain only $3,000. They're risking $1,000 and they're looking to gain $3,000. Why? Because they entered right down here. However, if the trader was patient and ignored all of this time here, and by the way, just to make sure you guys understand, from here, from this whole time that the price wasn't reaching the entry, this was 11 hours worth of time. So they're sitting there on the computer for 11 hours waiting for the price to reach it, and it never reaches it, so they give up. And because of their impatience, they just enter right away thinking the price is going to go down, and it doesn't. So let's say the trader instead was patient and entered where they should have up here. They're able to make the stop loss smaller and their take profit even farther down. And in this case, it's the same trade, but this person had a better entry because they were patient. So here, their risk to reward ratio is 8, meaning they're still risking the same $1,000 if they're wrong on the trade. But if they're right on this trade, they're now looking to gain $8,000. The only difference is the previous entry was down here. The new entry is up here. The only difference is one trader was patient and the other trader jumped the gun and was not patient. And then you'll see the trade hits take profit. So now going back to like the 4-hour time frame, that's one example. It's jumping the gun too soon. The second example, let's say the price continues to play, and let's say a trader notices that there's a potential zone of interest right here. Let's say they notice there's a potential key level being formed right here, where the market has created a support and then it has created a resistance area. So they could be thinking to themselves, all right, this market looks like it's trending downwards, so let me go ahead and enter a sell. And they could also be analyzing the chart and say, okay, this might be creating what's called like a potential double top. And they're looking to potentially enter a sell right over here, somewhere at like a double top, potentially, right? So that's their trade idea. Their analysis is on point, for example, but let's see what happens when it comes to having that patience. So we're going into the 15-minute time frame and we're looking for the price to potentially go back up. So let's see what happens. The price goes up, they enter their short. Let's say they enter right when the market hit it, because it hit it pretty quickly. The market hit it pretty damn quick. So as they enter their trade, let's say they're looking to take profit in this same little bottom area here. Let's say this is their trade. Let's say they're looking to take profit right over here, and their stop loss is just above the zone. This is what their trade is, right? They're looking for the market to go down. This is what they're looking for their trade. So let's go back to the 15-minute time frame. Now, this is their trade. Their trade got activated, and let's kind of see as the market continues to play. So remember, each candle is 15 minutes passing by. So as their trade is running, hours are now passing. They're now currently in their trade, and they see that the trade is going in their favor. But what happens is they continue to see that trade is going in their favor. And if the market does something like this, where the trade starts going back against them, what they'll end up doing, if they see that's going back to break even, they'll end up closing their trade because they think that the market is going to continue to go back up. And because they were not patient, they close their trade, and then the market continues to leave without them. So let's see what the market does here. And remember, because of their impatient, because they couldn't wait those certain amount of hours, let's see, they entered here and they ended up closing their trade within 12 hours because the trade started here, and 12 hours later, the price was still back at break even. They closed the trade, but you see what the trade has done now. Going back to the 4-hour time frame, just to speed it up a little bit faster, you'll notice that the trade, had they stayed in the trade, it would have hit their take profit. It would have hit this little small little zone that they marked over there for 138 pips. That's the second reason why traders in the actual markets lose, because they don't have that patience. Patience number one is being too impatient to get the right entry. And impatience number two is when they close their trade too early and don't let the trade breathe because they think that the trade is going to go against them. And this is why mastering your patience is so vital. Mastering your patience in terms of success and mastering your patience when it comes in terms of trading. Because if you quit too soon, you could quit prematurely before you achieve that actual success that you were supposed to achieve. They say the most expensive place in the entire world is a graveyard because most people's dreams and goals lie there because they did not give themselves a chance. So you have a choice. You can fail like 90% of other traders, or you can succeed like the 10%. And at 1 out of 10 chance, that's not bad. You just have to learn how to do this the right way and stick with it until you achieve that success. You will have bad days. You will have bad weeks. Hell, you will have bad months. That's something that we just have to accept. And I know you'll have that success. Why? Because you're here educating yourself, watching these videos, while most traders, they just end up hitting buy or sell whether they think the candles are going up and down on their phone. But you're actually educating yourself. Right now, you're on your chapter 1 and your chapter 10 is already waiting for you. You just have to let time do its thing. And for those of you who were patient enough to get to the end of the video, I want to know who you are. So go to the comment section below and type the words chapter 1 into the comment section. I'll talk to you guys soon. Take care, guys.